All right. What's going on, everybody? So, we've got a pretty good list on the topics to discuss today. We're going to try to work through the ones that I think we can get through quick, and then, that'll bog us down into the ones that I think will take more time. There was a question about the bullish bears doing trades and calling out trades. And while we do that, right, we do call out trades. That's not our number one focus. And it's usually what new traders ask for as soon as they get here. Like, hey, where's your trades at? We're not a paid trade alert service. If we was, your subscription would be a lot higher. You don't want to find a trade alert service for the price you're paying at the bullish bears. And it's not because, only good things are expensive. That's a belief that is just not true. There's plenty of things that are out there that you could find for free or cheap that are really good. But when it comes to trade alert services, you want to be very picky and particular about what you use because there's a lot of stuff out there, right? So there are some rules when it comes to trying to find a trade alert service. I'm not promoting the idea that you should go out and get a trade alert service or that they, that you should do that. But realistically, I get it. If you work a full-time job and or you just don't have the capacity to find your own trades, then being exposed to a place that is calling out trades can, pay for itself, right? And it can keep you in the money. One thing I know a lot of professional traders do is they subscribe to those services to get trade ideas. They don't necessarily follow the trades that are announced. They just use the announced trades to find their own trade opportunities because there is benefit from them. So if you are considering a trade alert service, some of the things that you really want to make sure of is that they are legit. They should have a record of the trades that they've been taking, and that record needs to be on a live account. None of this hypothetical profits taken stuff, right? I see a lot of that out there where they say, yeah, this had a hypothetical return of 34%. Who cares? Put your money where your mouth is or shut up. So we want to see real trades and real results, right? So live trades. We don't want paper trades. They should also preferably be defending those trades. Call it trade management because they don't have to, right? If they just close it as a loser, that's fine. If they're documenting that they did manage the trade, that's the important part. But a lot of options trades can be defended. There's no reason to eat the loss per se. You can just adapt it, roll it, adjust it, modify it, and you don't need to take the loss. Or that you can at least significantly decrease the loss, right? That there's things you can do. I call it defense, but management is the normal word. Also, if you're going to use one of those trade alert services, make sure it's a service that's trading trades in a size that you can actually play with. Right. And what I mean by this is I know a service that is run by a guy that helped build Thinkorswim. So he's legit, right? He's got a history. We can look him up in social media. He's well known. And he also trades these really large trades, like taking SPX with short calls, for an example, naked short calls. Do you know the kind of account you need to take naked short calls in the SPX? A really big account. Or when Google was like $3,000 a share, they were running naked calls and naked puts on Google back then. So massive size trades. And then his followers would say, "Hey man, I can't follow you in that trade. You would need like a $500,000 account with margin privileges to do that." And he's like, "Well, if you can't follow the trades, then don't follow them." Well, yeah, okay, but that doesn't help the people that are paying 200 a month to be there, right? So the trade size needs to fit your account size, and they should have documented records of the trades that they're taking, that they're willing to show you before you ever become a member so that you can see that. And hey, you might have an account that could actually trade that size, but maybe you're just not willing to risk that size, right? That has to fit too, that it meets your account risk and or your personal risk. So there are companies out there that just post the trades. They have no background or depth into the trade. It would be better if you understood why they were taking the trade. So some D&D or trade development, some due diligence, as they say, the DD. That way, you're not just following some alert that says buying Apple at 234 or whatever, with no idea what the heck is going on. So, 1 year of trades, a record of trades. It should have wins and losses because nothing is a guaranteed win, and losses are common. It just happens. It's just the way it is. All of those things. If you're looking for a trade alert service, that's what you would want to find. If they don't have that, then they're not a trade alert service that I would ever recommend or that I would ever try to subscribe to. And I have tested some over the years, right? It's just like a rite of passage. Everybody goes out there at some point and messes around, especially when they're recommended on, say, Thinkorswim's website, which they were the ones that I was looking into. So they are out there. Um, just because you're using a trade alert service does not mean you're some noob who doesn't know how to trade. Like I said, you could just be a person who's busy and don't have time to go hunting for your own trades. And you can also use their alerts just to give you guidance on something that you may be interested in. And then you can find your own trade, which the Discord has some of that already, right? If you're just looking for trade ideas, not trade call outs, then look in the Tradie Tick channels because we got the Bullseye, the Stock Breakout channel. I would never say that these are trades, that you should just run down here and follow all of these trades as they come in. Heck no. But they can get your eyes focused on a particular company, say BYND with a stock breakout, and then from there maybe you do some due diligence and you decide that that's a fake breakout and you want to short it. Great, do that, right? Who cares? Or you know what I mean? Like you do you. So if you're just looking for trade ideas, there are plenty of trade ideas built right into the Discord with the bullseye, the golden sweeps, the stock breaks out, all of it. And that comes from Tradie Ticks, which of course, if you want to know more about it, go to Google, go to YouTube, search Tradie Ticks. They've got plenty of videos and articles that explain what their scanners are doing, what the criteria is, what their results are, all of that. It's not on us to provide Trading Ticks stats. So hopefully that covered the trade alert because we are not a trade alert. We do post trades, and I've had people ask, how come I don't post more? Not just me, but the other moderators too. When it comes to me, because I can't speak on what the other moderators are doing, I try to weigh the risk in the trade versus who's going to be getting the alert, right? Because we got a lot of people on social media that follow us and they don't know what the heck they're doing. So if it's one of my more complicated trades, I very often won't post it. If I think it's going to be at some point rolled, adjusted, or modified, I won't post it. Well, that's over 80% of my trades, right? If it comes to options trades, because I anticipate that I may have to roll it or adjust it or in some way modify it. But if it's just a straight up trade, I'm going to get in here and get out there. And if it doesn't work, I'll eat the loss. Then I have to decide, okay, well, is that loss something that I think is too big for someone in the community to handle? So I got some of my own metrics trying to figure out what I should post in there and what I don't. And so most of what I trade doesn't go in there. But still, we do post trades in there. So that should cover that. When it comes to a trade checklist, you do want to match that to the kind of trades that you're taking. So, for an example, options trades. Some of the checklists for me, for an example, have to do with, is this a viable product worth trading at all? So, I like to look at wins earnings because I don't want to trade a stock that is me being in the trade when it's going to be reporting. If it reports in 3 weeks, but I'm getting options that are 3 months out, I'll be in that trade when it reports. Not interested, right? So, does it have earnings? Where is the dividend if it has dividend? Because I don't want to be in the trade if it's going to get hit with dividend while I'm in it. Is it liquid? And these are just things that I use as a checklist. When I was new, I would go down this list looking at each one. Okay, when's the earnings? When's the dividend? Does it have liquidity? If it didn't meet that criteria, I was done. I didn't waste my time doing anything else. The worst thing in the world is to spend 30 or 40 minutes looking at the stock, reading a bunch of reports, doing all this work, and then you go in to trade it and you find out, oh man, it's got earnings in 3 weeks and it's an illiquid turd. Well, great. Now I don't want to trade it. And I just wasted all that time for nothing. So it would be better if you use that checklist as a part of your scan criteria. And then you just have a watch list that has, quote, tradable stocks in it that has liquidity with no earnings coming and dividend is already passed, something like that. But you can also use things like cost. I don't like to trade low float penny stock trash unless I'm specifically looking for low float penny stock trash. Those kind of trades I trade in a particular style, and I only want those if that's exactly what I'm looking for. Otherwise, I don't want it. So, using something like a dollar value, it needs to be a minimum of a certain dollar amount. And that also goes on the other side, on the max side. One of the ways that we can defend an options trade is just by straight up taking the stock or buying stock. So you can use a max dollar as a part of your trade checklist so that you don't trade something that's too expensive. For an example, the SPX would be kind of expensive, especially if you're trading in a small account. There is no shares in the SPX, but I'm just using that for an example as an expensive stock. So you could put your checklist together that says, is this stock too cheap? I don't want to trade it. Is this stock too expensive? I don't want to trade it. Then you can start to focus on things like trend, momentum, volatility, volume, and you can use that checklist to evaluate, okay, what is the momentum model right now? Does it have momentum? Does it not have momentum? Is the momentum increasing or is the momentum decreasing? You can use that in your checklist. And if you're just going through the list, hitting on every one of these variables, by the time you're at the bottom of the checklist, you'll know that the thing that you're about to trade meets all of your criteria and you didn't forget something. Because it's easy to forget something, especially when we get into a rush. So you could check on all four of those and quantify or qualify. Does it have enough volume? Is the volatility low enough for me to buy options? Is the volatility high enough for me to sell options? Is it in a trend if I'm looking for a move? Does it have momentum? So I'm trying to define what days to expiration I should use, right? If we got momentum, we can use a lower data expiration. So all of those can be a part of the trade checklist. Now you can use any metric at all. I'm giving some examples of some of the ones that I've used. If you use indicators like a MACD or a stochastics, fine, put that in there. Maybe you need an ADX above 15 or whatever it happens to be. Also, when it comes to that checklist, you can build indicators that check your checklist for you. So, for an example, I've got this indicator with the labels at the top of the screen. That's really handy because I don't have to go in and check every one of those things. I can see it right there on the screen. My drawing ain't drawing for some reason. Quitter. Some days. I bet it works now. How about now? There it is. So this is running an ADX and a moving average, and then it's validating trend and comparing that with the CCI to determine on the chart time frame that I'm looking at, is there trend, is there momentum, where's that SMA, and what's the ADX doing? You can combine all of those, any of those, and so much more than those into one single indicator and look at my price chart. No lines except for what I drew. There's no ADX on here, no moving average, CCI, no indicators, just that label across the top, and it's not getting in the way. I can see price. So when you're putting your checklist together, once you've put all those things on there, and if you add indicators, fine, do that too. Go back in the past and find examples where the indicators you listed have the signals that you're looking for that also matches the stock with the price that you're looking for, with the kind of liquidity, the earnings, the dividend, all of that. Because if you can't find examples of it in the past, it's very likely you're not going to find examples of that in the future. It helps you try to validate what's the occurrence rate. How often is that particular instance going to happen again in the future to try to figure out, well, how much money can I expect to make with this strategy? There was a discussion about strength and weakness on the intraday. I kind of like this topic because it's something that I've focused on quite a bit over the years. So there's what I consider tradable times in the day, and then not so tradable times in the day. Um, One of the most unique things that I learned from an old school trader was to hang out on a 1 minute chart. And I say it's unique because a lot of old school traders, they don't like these small time frame charts. But he was talking about how well do you know the product that you're trading? And in futures, that's kind of a big deal, but it's not just futures, it's anything. On the intraday, how well do you know the product that you're trading? you can bring up a 1 minute chart and you can normalize the kind of volume that you're getting for the product that you're trading. Now, I trade the same thing over and over and over again. The ES and the NASDAQ almost explicitly, but not just that, right? There's also uh, other products and equities and options and all kinds of stuff. But for an example, in the ES, if you're on a 1 minute chart and you get intraday volumes of 10,000 or more, the market is going through some serious volatility. Now, you're going to get that at the open because, well, it's the open. That's a powerful time of day. You can define power by a lot of volume in that instance. But if randomly through the day we start spiking up above 5,000 and getting into 7 or 10,000, that should get your attention. You should be searching for headline news, figuring out what the heck is going on and why are we getting those sort of volumes. And I'm using the ES here, but if you trade Tesla every day or SPY or whatever it is, then you should know what's the number of volume that I'm looking for where things are starting to get out of control. If it's something you've never traded before, call timeout, go in the past, look at a 1 minute chart, pick a day that you know had some violence or some volatility to it, and look at what that stock's volume did on that day when that event happened to kind of get a feel for what oh damn looks like. Because that's what you're looking for. You're like, oh damn, something's going wrong. You can see it in the volume oftentimes before it really even shows up in the price. Or it'll confirm in volume that it's going to continue in price. When it comes to different times of the day for power and weakness, lunch is a drawdown period. It's a time where we expect less volatility. I did a chart at one point that was all pretty and colorful, and it had these boxes on it that displayed the market through the 24-hour trading period from 6 o'clock at night all the way up to 5 o'clock the next day. So 23 hours. The Globex time zone here is this light shaded area. That's all the overnight. 9:30 starts when the chart gets dark. So between these two lines, that's 9:30 to 4 basically. It's supposed to be 9:30 to 5. In that time frame, we can also draw boxes for lunch. That'd be say 11:30 to 12:30 or from 11 to 12:30, somewhere right around in there. There's also between 9:30 and 10:30 or just 9:30 and 10. That'd be another box. Then there is 3 to 4. That's another box. And from 3:50 to 4, which would be another box. That's the MOC orders, right? Which actually it starts at like they start taking orders at 3:30, they finalize at 3:40, they announce at 3:50. You can work those boxes out for yourself, right? So in the lunch zone, we expect less volatility. At the open, we expect the most volatility. In MOC, it can be whatever the MOC was, so a lack of volatility or a lot of volatility, depending. So that only leaves you the other area, right? This time, say between 10 and 11, and then the time between, say, 1 and 3, where we don't have the known unknown of violence at the open, lag through lunch, or start a power hour. Not a lot left to offer, all things considered. And you should be able to validate that on any chart that you're trading. If you can't, then refer back to the volume, circle back through the last couple of days or weeks, and see that the volume matches whatever time frames you're starting to mark out on the charts. So that would be your periods of strength and weakness on an intraday chart. Add to that, however, is there economic data that day? Wednesdays, for an example, at 10:30, every Wednesday, unless it's a holiday week, we're going to get crude oil inventories at 10:30. Well, that's really important to know, right? Because that means Wednesdays at 10:30, even Wednesdays into 10:30, we might kind of go sideways while we wait on inventories. There's also consistently auctions that are at 11 o'clock, 11:30, and 1 o'clock. if we're supposed to be in lunch and we get a big auction at 11:30, that can break us out of lunch and get us running. So lunch may be a period of weakness a lot of times, but if we got an auction that day, then we could expect that there won't be any weakness during lunch because we're going to get an auction. You'll want to check to make sure that today there is no economic events on the horizon that are going to mess with our typical weakness and strength periods within the trading day. All right, using AI. There's always a love hate when it comes to back testing with automated systems and then nowadays using AI. I don't recommend that anybody uses AI to actually take a trade. That would be a bad idea. But you can use AI to do all sorts of things, especially help you develop indicators since companies want to take advantage of new traders and sell you things that they should be giving away for free. But you can also use AI to help you research companies. We always say don't trade if you don't know what the product is. Well, there's so many companies out there. I don't even know them all, right? There's just so many companies. Maybe I like a chart and I want to trade it, but I don't know what the company is. I don't know what model they use. I don't know who they are, what they make, when their last earnings was, who runs the company, have they ever been in trouble before? Maybe they're shady and they like to cheat with their accounting books and they've been caught 3 times and kicked off the exchange twice. Probably would really like to know that before you go to get into a swing trade with them. So you can use AI to do background on a company just to find out who the heck is this company? Is it even based in the US? When was it made? How old is this company? What moat do they have around it? You can also use AI to research market concepts like moat, for an example. If you've never heard that phrase before and you're wondering, what the hell is a moat and what does that have to do with stock? Ask AI. I bet it will explain it to you in an easy to understand way because you can tell AI, explain this to me like I'm, you know, a high school dropout, and it'll lower it down and spoon feed it to you. That there's nothing wrong with that, right? Get it fed to you in a way that you understand so that you can move on to the next thing. We're not asking AI, should I take a trade in Apple? But we can ask AI, hey, how was Apple's earnings? You know, so you can do research with it. You can research market concepts with it. I see people every day come in here and ask me questions like I'm their Google. Hey, does this app work on a Mac? I don't know. I don't own a Mac. If you do, why don't you go to Google or whatever you use on a Mac and ask it, right? Like, you better learn how to do research if you're going to be a trader, because if you can't do research, you cannot be a trader. You will fail. We have to find answers to the questions, and that does not take mean that we run around taking surveys from people asking them, "Hey, what do you think's the best broker? Hey, what do you think's the best options trade? Hey, what do you think is the best indicator?" Surveys ain't going to get you anywhere. Background and work and research will. And if you can't do research, you're screwed. You're not going to make it as a trader. Just hire a fund manager and let them manage your money. So last week, or the last stream, we were talking about indicators and how if you got an indicator idea, hit me up with it. I'll help you find the answer to it. And some of you took advantage of that, and I love it. It's awesome because it'll make for great examples today. There was one for uh, finding the open and getting that marked on the chart for us. All we had to do is go to AI, tell it we're trading on Thinkorswim, and ask it to draw a horizontal line starting at 9:30 market open. And it did that. Not successfully. It gave me errors, but it was a simple fix once we saw what the errors were. there's a lot of AIs out there. I haven't tested them all. I don't know which AI is the best one. I'm sure that that is changing constantly, by the way. And the best one today may not be the best one tomorrow. So I use Grok. I also have used Copilot. I don't use it as much now, but I have used it. I like Grok. It does a really good job. And on the phone, Grok is on an app on your phone. It is fantastic because you can just talk to it and it just talks back to you almost like a human. If you whisper, it whispers. If you yell, it yells. And it's got attitude. It's neat. So we built this enhanced SMI indicator. And then we also did a market at open indicator. Got to get to it though. The prompt for this, I went and found the original indicator. This was for a stochastics momentum index, which Thinkorswim has, the Thinkorswim stochastics momentum index. I copied all the code out of that, brought it over, gave it to Grok, and said, hey, I want to take this code and I want to add to it. So if you have an indicator that you already like, say a MACD, a stochastics, an RSI, and you want to do things like add a label or add clouds, maybe have the lines change color as it moves, copy the whole code out of Thinkorswim, bring it over and give it to the AI and say, hey, this is what I've got. Here's what I want you to do with it. That will really help make sure that the answer you get from AI is more likely to work, right? If you don't give it something to work with, the outcome may not be what you're looking for. Even if you do give it what you had originally, it doesn't mean you're going to get something really good, but it's a start, right? So that's one tip right off the bat is if you have anything to work with, give it to the AI. But that also means you can pimp out a lot of indicators on TradingView or Thinkorswim just by copying the code, giving it to it, and having it make adjustments like putting the line for a crossover on the upper part where your candles are at, right? Something like that. It doesn't sound like much, but if that's what you're looking for, that's fantastic. Then you don't have to go spend $30 to have some company bill you for it. So it gave me the code, and the error that it made was just this little section right there. That's it, just the color part. Well, I went into another indicator and copied the color part and just deleted that, put it in, and we're done. Just it was just that easy. You're probably not going to know how to do that, right? If you don't code Thinkorswim for yourself. But if you get that error, just bring it back, tell it you've got an error, point out where it'll fix it. The other one that I had that was the open, right? So market open lines. It wrote it out for me. It did a reasonably decent job. It had the same color code issue for the lines. Fixed that, and it did okay, right? So if you if you don't have an indicator to work with, make sure the indicator that you're trying to get is actually something that it can make. I've seen proprietary indicators on like TradingView. They're really complex, very complicated indicators, and they're using proprietary data from a particular source, which is why they're paying for the source and they want you to pay them for it. I get that. They're spending money, they need you to help pay for it. Those kind of indicators I'm not really upset about because they have a valid reason for asking you for money. But you can't expect AI to be able to duplicate that outcome if it doesn't also have the same data source, right? So I'm on TradingView. I'm looking for a particular indicator here. It's a really cool indicator, and I know that it can't do it, right? I just got to find though. I guess it is this one. I just wasn't on the right chart. So we'll go to Apple, and this indicator starts to pop up. with all of this options language here? Well, I would love to have this indicator, which is not free, but I can't ask AI to go build this indicator because one, I don't have any of the code to work with, but two, they developed this from proprietary code and they're reaching out to a specific broker with it. No can do, right? So you got to be willing to compromise on your expectations for what you expect the indicator outcome to be, especially if the people are keeping it secret. Um, Simpler Trading has a lot of indicators. The problem is a lot of their stuff is hand drawn and updated every month or so. So you got to go back to the website and download the latest version. And they marked those levels by hand. Well, AI can't duplicate that. It doesn't know the criteria that they're using to mark the indicator. So you can't replicate that. Or there's secret little proprietary things like their squeeze indicator. They don't make it public about what they modified on the squeeze indicator to make it fire early and do the things that it does. Well, if it's not public knowledge, AI isn't going to know how to make it happen. Otherwise, if it's something less complex or less complicated, marking last week's high, yesterday's low, ask AI. If you want to adjust a MACD or make multiple indicators in one, like this one that's looking at the ADX and the SMA and the CCI, you can combine indicators on Thinkorswim. Have AI do it. Something really neat about using AI in trading is to go to AI and ask it what is really popular in the trading space. Say 30-day swing trades. Look at the answer. It's probably something like MACD, RSI, and moving averages. Probably, right? And then say, well, how are they using it like that? Just keep asking it questions. What's the criteria they're using to trade with the MACD and the RSI and the moving averages for this supposed strategy? It'll lay it all out. Ask it, what am I supposed to look for? Crossovers, divergences, what time frame should I be using it on? It will develop the entire trading strategy for you. And again, it's not like you got to run out and trade it. Depending on what AI you're using, you can do a back test with it and ask, okay, if I applied that to Apple over the last 3 years, how many occurrences would I get? What was the win rate, the loss rate, the profit factor, and the loss factor on that? So it can guide you towards popular trade strategies, candle strategies, indicators to use on them strategies, popular profit targets, all of that. The problem when it comes to new traders and AI is if you don't know something, how are you supposed to ask? Right? Like if you've never heard of profit factor, you wouldn't know to go ask this thing about profit factor, right? So that's one of the number one hangups, which is why I tell people open a Discord and use that while you're watching videos or reading a book or a blog or anything to do with trading. And if they mention anything that you don't understand, write it down and then follow up with that. Take the thing that you don't understand, bring it to AI and say, what is this? Whatever it happens to be. And then learn about that one thing and see where that takes you. It probably leads you to something else that you don't know. And then you learn that, and then you're on to the next thing. You can do a lot of research concepts like head and shoulders, cup and handles, falling wedges, rising wedges. How often do morning star on a daily work? There may be published statistics on that that we don't even know about, right? Another one is peer reviewed work or peer group work, not peer reviewed, peer group work. So say you want to trade a stock like Joby, and you look at it and you find out it's going to have earnings in 3 days and it's got dividend next week. And now you're like, oh, shoot, now I can't trade it. But this is in a specific space. You may not be able to trade Joby, but what are its peers? And maybe one of those has a similar chart that already had earnings and its dividend is out of the way, and you can trade that one instead. Who's Joby's peers? Easiest way to find that out, just take it to AI and ask it, hey, I wanted to trade Joby. I can't. Who else is in this space? Give it some criteria. US based only, blah, 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 less than this many dollars. Give it your checklist if you want to make sure that it knows not to bring you $800 companies from China. And then, now you got a list to choose from. So it's really good to find thematics. That's the word that ties into that. It's themes, and then just add a couple letters to the end of that. Thematics. All right, so I'm going to bring up one of my discords here, where I was putting these discords together when I was learning, where I would pick a topic and I'd just start to hone in on it, gathering everything that I could gather to put together the sort of material that I was looking for. I've got, like, say, multiple Thinkorswim indicators, discords. This is the public one that most of you guys probably have been in if you have Thinkorswim. Then there's this one because somebody wanted to buy the original, and I was thinking about selling it, so I started to make a second one. It was more cleaned up. It didn't have as much background and depth, but I was putting this one together. Then there's my own private one that I don't let people in, and you can put together chart packages that way, right? So in the one that you guys are in, for an example, if I go down in there to setting up Thinkorswim, you'll see these setup videos on how to make your charts look a particular way, or how to make ratio charts and custom ETFs, how to run multiple time frame indicators or multiple time frame chart setups, like the anchor chart setup, anchor signal setup, charts just for market breadth so that you don't have to go in and build it every time. There's, UVOL, DVOL, ADSPD, all of that. And it's just saved so that if I ever accidentally delete the chart, I just come back in here and get it again. This fits into the what we watch and why category, right? Tick, C tick, market breadth. So use the Discord to put your chart lists together and build your charts out and then save your work, because we all know Thinkorswim can do goofy things like delete all your charts. Man, that sucks when that happens. If you didn't save it and it deleted your chart, now you got to start from scratch and build it all back again and hope you remember everything that you had on it. That's kind of hard for newer traders to do. But if you saved it, you just load it again. It doesn't matter. Now, these charts are like ratio charts: growth versus value, tech versus energy, flight to safety, stocks and bonds, vol analysis. These are in the Discord that you guys are in, right? This isn't my private Discord. This is the one that anybody can get in. Put your watch lists together. If you're focusing on ETFs or materials or energy, finance, consumer staples, whatever it is that you're doing, put your list together in there so that you can save your work. your day trade charts, your swing trade charts, what's on them, maybe even why you have what you have on there so that you can have different ones as needed. This is my old swing setup using the RSI Laguerre, which I still use the Laguerre. It's not on my main setup. And then the 50 and the 200. Pretty simple. Now I've got a couple more moving averages and a Bollinger Band on there. If you take the time to put together a Discord like this, you can add things like candle patterns that you want to trade or just candle patterns that you want to research, indicators that you want to research. So, for an example, there is the weighted AD. The weighted AD is a private indicator created by somebody who is selling it. And that is a guy that works with Peter at Shadow Trader. They don't want you to have this indicator for free, right? And I have it. I didn't buy it, but I have it. And somebody wanted to have a copy of it. Well, I can't give it to them because, well, I don't want to get sued. So I went looking for this thing on the internet and I found the exact same thing, but the code was a little different. All we had to do is just change the lines and make it look pretty. And then we were there, right? For the indicator database on Thinkorswim, scroll up every morning. I post for the morning briefing, right? It's that really big, long post that comes out every morning. This morning briefing Zoom meeting. This is where you join the live stream. That's where you catch the replay. This is the steps to the morning briefing. Here's the blog posts, and here's the Thinkorswim workbook. So you can join the workbook from right here. Go to that link, and then when you get there, push that button. This one right there. There. So I found an indicator that worked exactly like the weighted AD, right? The numbers on the side weren't the same, but the shape of the indicator, the way it functioned, everything was the same. And you could see the code, at least I could because I had both codes. They were not stealing the dude's code. They actually just made another version. So it was a legit one. If you come across an indicator that is a pay to play indicator, look around. You'd be very surprised what you can find for free out there. You may be able to find it even though it's a paid to play indicator. Maybe. It never hurts to look, right? Especially if you're looking at use thanks script community or Reddit, because both of those sites very often will break down an indicator and tell people exactly what it's doing, what it's using, where you can find it. And that's awesome because then you don't have to spend money to get it. Some of these indicators are over $1,000 for silly stuff that has no business being charged even $10, let alone 1,000. That always frustrates me when they do that. So if you go into that Discord, you can get all of those charts. You can save them for yourself. You can upload them to your Thinkorswim. And I encourage you every once in a while to clean out your Thinkorswim because it'll get really bogged down. just go to user. All right. So user defined. These are all mine for an example. And I can use the keyboard to highlight all of them at once and delete everything in it. You know what I mean? Like I can just knock them all out. And as long as they're not on a chart right this minute, they will get deleted. But you can also copy them and then you can, export them to a spreadsheet, keep them in a text file, stick them in a Discord, whatever you want to do. Earlier today, I was posting some stats on options. Well, that comes from one of my Discords too, right? Tasty has a ton of videos. I mean, just so much, right? It was too much to keep track of. So much stuff. So what I did is I went in and I built a Thinkorswim, a Tasty Discord, and I started to focus on the different things that they were focusing on. They did a whole episode on should you fade the gap when a stock goes parabolic and makes big runs to the upside. Should you fade it? That was a really good video series. Or days to expiration, the argument between the 30 days and the 60 days, and which one you should be doing as a premium seller. Optionality video, butterflies. Should you make the butterflies really big and really wide, or should you make them compact? And what's the benefit? Like all these questions, right? With really good answers too. So I just went and gathered up videos like crazy, started sticking them in the Discord. And then as I would watch the video, I would stop, take a picture, put it in there. And if I needed to write anything with it, then I would write anything that needs to go with it. Now, me, I'm not ADHD, but if I see a squirrel or something, ooh, squirrel, I might get distracted, right? I'm kind of easily distracted. So by sticking a video in the Discord and then watching it from the Discord, it stopped me from messing with my charts while kind of half-ass paying attention to a video that I'm not really watching. And it stopped me from, say, writing in the Discord when I should have been, watching the video. It really kept my focus on what am I doing? I'm watching this video. So that I was actually paying attention to it. Then all my notes were underneath the video that I just watched. So if later I went back and read my notes, I'm like, I don't understand what the hell I said here. What did I mean by this? Well, the video's right there. I can just click on it again and start watching it. My notes are right there with the video. That really helped with the learning curve of trying to understand complicated situations like calculating implied vol standard deviation models. That can get a little twisted. Using the square root of time just hurts my head. Standard deviation models, right? That sort of stuff just it gets a little ugly. So Discord can be a powerful tool to help you really become better at trading. I've often said you can improve your trading over 100% just because of Discord itself. That's a bold statement. 100% better. Well, I mean, if you're new, it's 100% better than I didn't know anything. But still, even if you've been trying to trade for 3 years and you come in and you start using a Discord, you can improve yourself for 100% better than 3 years of trying. Stats, statistics, videos, trade logs. That's my playbook in here. And this isn't my real playbook. I cut parts and pieces out of my book and I stuck it in here because I knew I was going to do videos on it at some point. To where we can go in and say, all right, well, what am I trading? Stocks, options, futures, and then which futures? Was it a winner? Was it a loser? What was the trade setup? And me, I like to use pictures to journal my trades. Something that looks like this. I got in here, I got in here, I got out there, I got out there. It's got the trade stats down below. And then any additional information that needs to be put on there, I put it on there. That way, when I look back later, it's not just, oh yeah, I took this trade at 8:30 a while back. It was a winner. I made this much money. It was, hey, what was I doing here? Trading a breakout on economic data. This way, if something goes wrong in the trade, or I don't like the way a particular trade worked out, then I've got a way to be able to explain it and focus on it and learn from it. Like this one, I should have added in on that pullback. I planned on adding in on that pullback and I didn't. So I put it on there. Hey, I missed the add in. And then in this base, I should have had more than one additional entry in there. So I missed my base play. I had really a poor decision model on getting out of this trade. I should have got out a lot sooner and kept more of my profit here. So that trade showed a real lack of conviction on determining my exit. You get all wishy-washy like, well, should I close it? Nah, looks like it's going to keep going. Then, oh shoot, I gave back some really good profit. Come on, get your stuff together. That's what I had here. A real lack of conviction on the exit. So I journal my trades with pictures. That helps a lot. Gives you something to actually look at and work on rather than just a trade log that says I got in here, I got out here, I used 4 contracts, I made X money. That's not a journal, that's a trade log. You can just download that information from your broker. They'll give it to you. They're keeping score, I promise. And if you do swing trades and futures, which, I don't do much swing trades now in the current environment. I used to swing trade more. I will be swing trading them more again in the future. It comes and goes, right? If you're doing that, then it gives you something to work on as well there too, right? Like this was swing trade, multiple days that I was in that, and again, a lack of conviction on getting out. It's been a reoccurring theme. The more information that you can put in that picture that can help you understand what you were doing, the better, the more you're getting out of the trade that you took, right? Especially if something went wrong and you're trying to fix it. In this one, I was paper trading before this, and so I still had some of the settings that I was using in paper trades. Then I went live and I was using the auto break even on a paper trade. Forgot to turn that off because I never use it in my live account. I didn't even think that it was on in my live account. But I forgot to turn it off. I got in and it kicked me right out of the trade. Like, what the heck? Right? That's stupid. But it was my mistake. And I had to reload, put my trade back on again. It's a good thing too. It worked out really well. Definitely it is a game changer. That's some nice feedback too, right? That I know this works for me, but I don't always know that it's going to work for everybody else. So that's good to hear that it's working for you too. This was probably the most instrumental thing that improved my trading above anything else, right? Being able to keep track of data and information that I was wanting to learn, organizing it so that I could go back and learn from it. Because there's just so much stuff out there, so much stuff. That way, if you come across a strategy that you like, or you come across a pattern that you want to trade, take some pictures of it, throw it in the Discord, and then figure out a way to trade the darn thing. There are known strategies that you'll come across in books or articles or just watching a video, and they'll name something, and when you go and Google it, it turns out that it's a real thing, like the X-ray strategy. That's a real thing, or the IX10 strategy, the central pivot range strategy. There's all these strategies out there, and of course you're not going to know them if you're new. You know what I mean? Like, if you're new, you don't know anything, so you can't just run out and Google a bunch of strategies because you don't even know what they're called. But if you run across one in a video or a book or an article, write it down, go research it. Even if you don't want to trade it, you can very likely use that strategy for your analysis. I don't trade the CPR strategy, that central pivot strategy. I never, ever trade that strategy, but I use it every single day in the morning briefing to do analysis. It's fantastic, right? I don't want to trade the damn thing, but it is really insightful on what the market is doing. So I use it for that. You may learn a strategy and like it and want to trade it, but at the very least, if you learn the strategy, you just learned another way to analyze price. And it adds up. The more ways that you know to analyze price, the more ways that you can analyze price. It's a win-win. Hey, how you doing? That doesn't even sound good. Kubota makes some nice stuff. Yeah, they do. Oh, I had a whole list of stuff today. We went through developing a trade checklist, talked about validating a trade alert service, using AI to develop indicators, to do research. Uh, right now, we were talking about using Discord to do journal work. Yeah. Yeah. Journaling has its rewards, that's for sure. One thing I notice, I see people say, I'm not on paper, or I'm still on paper, I'm not ready to go live yet. And journaling helps you answer that question, am I ready to go live yet? Because if your numbers aren't there, you know you can't go live. If the account won't survive, it'll blow up. And if the numbers are there, then it can give you the courage to go ahead and try live. Well, like I was telling him, I know traders who know how to trade, but they went back to work, say, because of insurance. I can't tell you how many times I almost went back to work just because private insurance is so freaking expensive. And so you get some guy who knows how to trade or gal, and they have to go back to work or they just don't want to leave the job that they have, and they get a trade alert service to help them find trades. That doesn't mean necessarily that they trade what's called out. They may say, "Oh, you went long in Apple in that call. I don't like that call." And then they go and they build a long trade in Apple using what they like. Right? But those trade alert services, there are some good ones. There's a lot of bad ones. And the main thing is just to make sure that they are trading real live money, not hypothetical paper returns, and that they explain what the trade is, not just we're getting a call in Apple. Why? You know, don't use permanent marker on your monitor. Yeah. And in the Discord, I was also telling them we got that Tradie Tick service built in. And that's a really good place to get trade ideas. That it'll show a call out on like Caterpillar saying that Caterpillar broke out on the day. Well, great. It's not telling you to go trade Caterpillar. It's just telling you, hey, cat broke out. Maybe you go do some DD and you want to short that sucker. Whatever. It's a good place to get some trade ideas. Is just looking in those trading tick channels. Yeah. Another thing that you do with AI is you can tell the AI what mindset to have before it answers your question. So if you just go in and ask it some options question, it's going to give you some generic answer. But if you tell it what profession it has and then ask it an options question, you're going to get a completely different answer. So you really want to pay attention to the AI prompts that you use. And if you don't know what AI prompt to use, funny enough, ask AI what prompt you should use, right? Like, hey, I want to ask you a bunch of complex options questions. If I was looking in the Rolodex of the phone book to call somebody who's an options expert, what would I call them? Somebody who spends 30 years of their life studying options, writing books, doing interviews. What do you call an options specialist? Once they give you that name, then ask it, okay, you are this whatever. Give me an answer on this. So that can be an elite research analyst, it can be chief investment strategist, whatever it is. Keep track of the prompts that you use that generate the good results, and then preface your trades with that, saying, hey, you are a managing director or a chief investment strategist, and I need answers for these kind of questions. That will really that'll really alter the outcome of the answers you get. There was a couple of articles about people interacting with their AI, and they're keeping track of, are you mean to your AI? They're keeping track, and the statistically, the younger crowd is nice to their AI. They're polite to it. They say please and thank you, and they, like give it thumbs up and praise it, especially when they're talking to it instead of typing to it. They're keeping stats on all of it, guys. So keep that in mind, when you think it's just you and your AI. No, it's not. Right. I too talk nicely with. And different AIs are good for different things. Like I've noticed that Grok isn't so great when it comes to Skyrim 5 questions. It'll drop the ball more often than not. Yeah, that's the prompts, right? That goes right back to what we're talking about. Keep track of the prompts that you use that work. Just like my sheet here, I'm showing it on the screen. I've got prompts that I use and I just copy and paste. This is the start of my prompt, and then I type in, whatever I want. That way, you're putting yourself in a better position for the kind of answers that you're looking for. But it works both ways. You can tell it, explain this to me, like a 10-year-old, and it'll back up and spoon feed it to you. Or tell it, hey, I know what the hell I'm doing. Don't talk to me like I'm 10. Give it to me straight. And it'll cut out all that extra language. All AI likes to add all that extra stuff. And like just cut to the quick. Yeah. Just give me the straight. There is an investing one called Warren AI. I have not used this, but I've heard good things. That is from investing.com's website. Stockcharts.com I hear is getting an AI. TrendSpider has an AI. There's a lot of them that are already built into it, right? Like you don't have to go out and use Grok, which is kind of an all-purpose AI. You can use one that is specifically designed for trading and or is looking at the chart you're actually asking questions about. And that really helps. I'll tell you that the isolation is no joke. People laugh because I'm so pale now, right? I used to be dark skinned because I was outside all the time. Now I'm crazy pale and I burn easy. We got on the bike yesterday. I got burned just from riding the motorcycle yesterday. But people are like, "Wow, what happened to you? You disappeared. We thought you died." No, I work from home. I I might get out by Wednesday or Thursday. I might see the sun, but oftentimes it ain't until Saturday or Sunday that I get out. I'm home all week. I don't put pants on. I'm still in sweats. Sweats are like my new work outfit. But I'm in the office every day, 12-hour days at least, often 14 hours. It's not I'm not in here, just 20 minutes and then I'm out the door again. Yeah, nobody in my world trades. And if I try to get them interested in trading, they're just like, "Shut up. We don't want to hear it." They have or they want some simple buy answer like, "Hey, what should I buy right now?" I'm like, "You have no idea the complexity of the question that you just asked." There was a this question on Apple. I had used the measured move for the reason for the diagonal trade that we had originally put on, but I did not use it for the confidence to close that gap. That came because it was a gap, right? Like um, my approach to gap close, I disagree with the way a lot of analysts do this. And it's not like I'm picking on one analyst. A lot of analysts do this. They'll look at something like Apple and they'll say, if price gets anywhere inside of this candle where it gapped from, then that gap is closed. And I call complete BS on that. Like, no way. That is not a gap close because we ended the day here and we opened the day there. That is the gap that has to close. But a lot of analysts will say, "Oh, well, we got into that candle as soon as we crossed that line." They're like, "Yeah, the gap's closed." No, it's not. Now, the to trade it, to think that we actually are going to go up from this low today because we gapped down and then we ran. We didn't know that it was going to go all the way there this morning at 9:30, but the confidence grew as it ran because the first thing it did was broke the close of the previous day, and then it broke the high of the previous day. Then it ran up and it got into this channel because this is a channel of importance. It got into the channel and then it just kept on running. And if we go into the intraday after marking those levels, you'll see that the volume continued to push, or the flows. I don't want to say volume, that's the wrong word. The flows pushed even more strongly as the move unfolded. It wasn't getting weaker, it was getting stronger. And that increased the confidence that we were going to go on up there and get that gap closed. The farther we went, the more confident we became. You can you can see it unfold here. Now this is a 15-minute, but if you're going to do that sort of work, you want to get on the intraday, the 1 minute, and even into a tick chart if you need to. And look, when it got to that gap close, which is right here, 234.38, that's where it stopped. Like it got there and it really fought that level. And it fought it some more later today. And that was it. That was the end of it. Down it went. Gap closed. And it's like those analysts never did what I just did there. They never followed up and they just say, oh, well, I hit the candle, it's closed. No, it's not. Not to me, it's not. But every analyst has their own approach. And it's not I'm right and they're wrong. I don't want to say that. Hey, thanks for stopping in. Have a good weekend. Always. The idea when it comes to different analysis is not who's right and who's wrong. It's just, hey, what suits you? You know? So I don't like saying that they're doing it wrong. They're just doing it in a way that I don't use. It's possible. I'd say try to find examples of it in the past and see if it worked out. Like one thing that you can do with this measured move is you can plot it lower, 50% and 100%. But you could also just put the 111 and the 1236 on there. Because what if this is just a lower high? We don't know that yet, right? But if it's just a lower high, then price came down and it's coming up and it's going to get a lower high and then it's going to roll over and it's going to get an equal low or a lower low. And if it gets a lower low, then you can measure from this high to that low and project your 111 and 1236. The neat thing about that gap close is find out where the 50% was, because there's your 50%. And that matches what the talking heads on TV would do because it's the low, right? Well, I mean, it's close enough to the low. So that matches their approach. This matches my approach. Both of them says we need to close above that level or we could set a lower high and end up going lower from here. I've done a lot of work over the years where I do candle by candle analysis. This chart that we're looking at, I'm not zoomed in. You know how on Thinkorswim we can zoom in like that. I'm zoomed all the way out. This is the maximum amount of chart that I wanted to look at. And I did that because I want to see just these candles so that I can very clearly see gaps, opens, closes, highs, lows, all of it. And I can draw on it and not have to sit there and squint. But you get something like this, and then you're like, well, what's this mess back here? I can't see any of the levels, the lines. So when you run a candle by candle analysis, and you really get zoomed in tight, I'm still on that yearly. And I've done a lot of work where you zoom in this tight and then you start working your way back one candle at a time. Where did this candle open? Where did it close? On the next day's candle, what happened with price action? Did it hit the mid and stop? And just keep working from that candle back to the next candle How far down did we go from this candle? What was its measured move? Was that a part of a bigger drop, like measuring all of this and trying to identify the drop down, for an example, like just candle by candle, open, high, low, close, what happened the next day? How did it correspond to the previous day? What's going to happen next? Because it's always what we all want to know, right? What's going to happen next? So with today, with Apple hitting that high, what's going to happen next? Well, for me, this is in the middle of a range. So I wouldn't be looking to trade here. If we were down at the low, I'd be willing to have a conversation. And if we were at the highs, I'd be willing to have a conversation. But I don't want a trade right here. So my brain doesn't look at this and say, well, what's going to happen next? Because I want to trade this. I don't want to trade this. Not here, not now. Absolutely. That's one of my favorites. Because to me, that's the narrative. If you can figure out the narrative of a company, you can trade that thing. And you can pick your favorite. There's plenty of AMD traders, Tesla traders, Apple traders, and that's all they do is that. Now, for us futures traders, right, we tend to stick to the futures, but we're doing the same thing, trading ES every day or the NASDAQ every day. If you can carry the narrative every day, where we've been, where are we going? Then you got a really good idea of identifying where are we going? That way you know where you're going next. Now, market breadth is one of the hardest things to kind of pick up on. Um, Advanced decline lines, price above 200, different ratio charts, because there's not a really great place to go and learn that in a like an organized book school learning format. But stockcharts.com has an app called Stock Charts TV, and it runs video 24 hours a day. I think you can get it as an app on your phone, and it's nonstop market breadth concepts all day, every day. Now, it is specific to their charts. So they'll mention things that you may have never heard of before because you might not have their platform. But for the most part, they're going to talk about market breadth tools, and you can really learn a lot from those. It's not going to be necessarily entry techniques and things like that, but it will be what the heck is the market doing? Collectively, is the entire broader market getting stronger, getting weaker? Is there historic risk that we are redefining again in the current market environment? It's just really great stuff that I've never found anywhere else. And they bring on specialists from around the world, like Ed Yardini. I can't spell this guy's last name, but we're going to try to find him. If this doesn't work, I know a place that has recently quoted him. Yeah, there it is. Yardini Research. This is an old man who's been doing this for a long, long time. And he's really popular when it comes to market analysis. Now, he's been wrong before, just like all of us, right? He doesn't get it right every time, but he's well respected in the community because he's not hyperbolic. The whole world's crashing and burning, and you should be short to your eyeballs. And he's not a perma bear or a perma bull, and he lays out the why behind his answers. He doesn't just say, I'm bullish. He'll lay out really clear reasons why he's bullish. And he is bullish. And he's got price targets into like 7,000 and 7,100, and like, those are crazy numbers. But he's been bullish all year plus some. And when he changes his mind, and he does change his mind, he'll tell you this data came out and now we had to readjust the models, and now I'm not bearish, I'm bullish, or I'm not bullish, I'm bearish. If you listen to Stock Charts TV and you kind of pay attention to stock charts on their YouTube, they will bring on people, and those people will just broaden you out even more. Like Brian Shannon, the guy that's really big on anchored VWAPs, or just on down the list. Just so many great guests that you don't have any exposure to if you're just poking around on YouTube or hitting different books that you may have come across in articles. You know, they may not have any relevance towards what is currently happening in the market. But if you listen to Stock Charts TV, which is free, it doesn't cost you anything, then you're getting current, right now, market relevant insight and learning about people that can teach you how to do it and seeing it done. Right. I used to listen to it. I didn't used to watch it. I would just listen like a podcast and not look at the screen. But it's fantastic stuff. I ought to make a commercial for these guys one of these days. I'm telling you, I don't get paid to talk good about them. They're just that good. They do have a public section, which took me a minute to find because I haven't been here in a while. This was the first strategy I ever learned, above the green line. Now, that lady has her own website. She will do the scan for you and give you the results. But what I loved was that she taught you how to do her strategy so you never had to pay her, right? If you had a stock charts account, and if I was to click this link, she just lays it all out and says, "This is what I do." And if you don't want to do it yourself, you pay me, I'll do it for you, I'll give you the answers. Otherwise, if you want to do it yourself, here's how to do it. I love that. That was the first one I ever learned. But these guys are all ranked, right? There's a vote that goes on every week. And so if they suck, they won't be at the top. They you'll never see them. They're all the way at the bottom. And if they're really good and they're consistently accurate, they'll float to the top. So when I'm looking for trade ideas, what I used to do is I'd come poke in here and say, "What are you guys talking about? What names are on your list that I want to pay attention to?" And a lot of these articles will explain what they're looking at and why they got whatever answer it is that they're trying to give you, so that they're not just feeding you, "We went long in Apple." It's, "Hey, we think the tech is doing good and blah, 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 and cloud services, and we like this stock." Oh, okay, cool. Maybe I'll go do some research on that stock. Here's another good one for you guys. There's this lady, Schneider, this lady over at Market Gauge. She does a write up that she'll send to you in an email after the market closes every single day. Mish Snyder is her name. Schneider. It's free, it doesn't cost you anything. And it's this she made this little like comic of the indexes. It's called the Modern Family. So it's got, mom, dad, grandma, grandpa, the whole group. And every one of those family members is a different ETF in the family. So she'll analyze each one of these and give analysis on what's doing good, what's not doing good, what's looking weak, and then tie that in with her own background and experience, and then lay out price levels to pay attention to. And it's all free. And she's not telling you to trade anything. She's just saying, "Hey, when it gets to this price, watch out. It's supposed to get weak there. It's a breakout level. It might be a turning point, blah, blah, blah." All really good stuff. And it doesn't cost you anything. If you go to their website, I'm not logged in, right? Go to Market Gauge, look for Modern Family. It's right there, Mish's Modern Family. It should give you a chance to sign up with an email. Just do that, or Mish's Daily. That's free too. And they're going to try to sell you something. You know what I mean? Like there will be ads and they will try to sell you something. But you don't have to buy anything. And you get that insight every day. And I think there's a weekend report where she kind of sums up everything that happened during the week. Just be careful when it comes to email addresses. I don't think MarketBeat has ever sold my email, but if you start signing up at a lot of different places, somebody's going to sell your email, and then you're just going to get flooded with a bunch of stuff, right? So use an alias email. That way you can cut it off and it doesn't mess up your email. I've recently started using Proton, and that's been really good. They're fantastic, but use something. The SPDR website, this is the spiders. These are the guys that made the SPY. They've got a fantastic app on the phone, by the way. It's just so awesome. But they've also got a great website, and you can sign up for an email from these guys. You'll get it once a week, usually like on Saturday, I think. That gives you a review of what happened last week and then gives you a heads up on particular names in certain ETFs that may be getting attention next week. So it's kind of a little bit of a look forward in there. If you don't use the spiders, then go to Vanguard or whoever you do use, State Street, whoever, and check their website out. But I like the spiders. They do a really good job, and their website is easy to use. Their phone app is fantastic. I love it. There's their weekly market summary. It's free. They're not trying to sell you anything. And that way you get a bit of background on the sectors and what they're doing. I don't think they're going to be good enough to catch like sector rotations and money flows and that sort of stuff. But yeah, I mean, get what you can get out of it, you know? I thought it would have been better than that. Oh, it's hard to tell. Uh, when it comes to resources, I mention often that as a trader, you've got to have resources. You got to know where to find them. And when you find good ones, keep them, right? Like just grab whatever you can grab. And if you find really good sites, put them in a database, put them somewhere. I like to use Raindrop to collect the websites that I like that I want to go back to. It's really good. The It might have been Gamma Labs. If I was mentioning it in the morning, Gamma Labs is one that I quote often. Let me open up my morning list and we'll see if that matches what you're looking for. That's this one. Oh, yeah, no, this one isn't a free source. Let's see, options and free. All right, so in the morning briefing, I talk about the OIC, so Options Industry Council. Then there's the OCC, Options Clearing Corps. Then there's the CBOE, and all of these have great free resources. They'll sell you things too, but they're all free and they're all options. Then there's the NASDAQ.com website. Those four should be go to if you're learning options. The OIC, the OCC, the CBOE, and the NASDAQ. I believe the CBOE has an entire education service put together on learning options, like with Q&A and I mean the whole works. I'm pretty sure it's them. And even the Nasdaq, which by the way, the Nasdaq, it'll give you things that are gapped up in the morning. It's got a really nice gap list. Usually populates, I believe, at the bottom of the screen in the mornings. But yeah, all four of these are great resources. They also do webinars. I get emails from them all the time. Yeah, this one. I just got that email. They were looking for registration. Balancing risk and potential rewards with calendar spreads. I'm not going, but I would have back in the day. Register for it, and then if you can't make it, they'll still send you a recording. By the way, guys, if you're trading futures, it's OPEX next week. So when you come in on Monday, it's very likely if your platform auto rolls, you're going to be on the new contract. And if it doesn't auto roll, you need to roll it to the next contract on Monday. I was just posting about this. The rule of 16. If you guys don't know this one, as an options trader, this is a really handy little bit of math. So on the side here is the implied volatility average someday when it gets there. Come on, you can do it. Don't get scared now. Turn off some of this stuff. Maybe that'll help. Wow. Maybe not. There it goes. You think? Think or Swim just told me, hey, we're having issues. Yeah, no kidding. Got issues. All right. So on the right side here in white writing is the implied volatility average, right? And it has a plus and minus on that average so that you can look at it and it says 24.74% and then 6.40. All right. So that's the expected move and that's the implied volatility model. Now there's a rule of 16 that goes into this. For every 16 points of volatility, it equals a $1 expected move in the market, or a 1% move in the market. And I posted that as an image earlier. If you was to scroll up in the chat, I was just sharing some stuff, right? I thought I had shared it. Maybe I didn't. I should have. Looks like I did not. Yeah, I did. Right there. There it is. So it's right here. Implied volatility average, 16% of movement per day. But you can also get the dollar value. Take the price of the stock and multiply it by that answer that you got on the first one, and that'll be your dollar amount. So if you find Apple, for an example, with a volatility of 27, then take 27 and divide it by 16, and you get, like what, 1.5 something. That's a 1.5% move. Then you're like, well, what's the dollar value of that? Take the price of the stock and multiply it by that 1.5, and that'll be your dollar amount of movement per day. And you can compare that to what they say is the dollar amount of movement, right? So that you can look for discrepancies. Because that's why you can have a one standard deviation expected move model of $25, but you can have an implied volatility expected move of $22.50. See, if I come in and look at Apple for an example, let's just get this trade off of here. The gray shaded area is a one standard deviation over the next 8 days. That's a 1 week standard deviation right there. It could move as low as 225 and as high as 242. And if I wanted to broaden that out and say, well, how far could Apple move between now and Christmas? Then I just change the chart to Christmas. And now that's Apple's expected range model. But it's still a one standard deviation expected range model. We'd want to come in here and see what the implied vol says. What are the traders actually trading for the move into Christmas? And that is a $26 move, higher or lower, $52 from top to bottom. And that is very likely overstated. We won't move that much. That's what the numbers say, is we will not move that far. So if you built your iron condor on those edges, your statistical win rate will go up because implied volatility is overstated a lot. They did the math, Tasty did, on a 25-year study, and this is their outcome. It was overstated 41% of the time, 41.5% of the time. In a 1 month range. And if you went out by a year, they overstated things by 20%. So in the shorter term, it's much more likely to be overstated. But they're not overstating more than half of the time, right? They're right more than 50%. It's like 59%. What'd you guys think of these posts? As a swing trader, I found these really insightful, right? Because it does answer that short term question about what do you want to trade, the 30-day or the 60-day. But the numbers were really impressive. This here, If you hold it until expiration, so a 60-day trade actually held for 60 days or a 30-day trade held for 30 days, the loss, the biggest one, that's too close to $5,000 for me. And this biggest loss was $2,000. I'm just rounding up, right? Easy numbers. 5,000 versus 2,000. I like the 2,000. But this had a higher win rate and a greater percentage of wins versus this one. So your average P&L twice the amount of the 30 plus some. It's not equal, it's more than equal. So you made more money, you win more often, you collect more credit, and your max losses are smaller. The 60-day wins hands down. But if you don't hold the 30-day all the way to expiration and you instead, or if you hold the 30-day all the way to expiration, but you close the 60-day at 30 days to where they're both being closed at 30 days, then look at the difference. The 30 days getting max profit because you held it to expiration. Its average P&L is 1130 versus 750. The losses are still bigger on the 30-day. The profit starts better on the 60-day. More wins, and then of course the number of wins. This category right here is exactly the same as the first pictures. That 30-day was like they just copied and pasted the whole thing. The only thing that changed was the 60-day numbers changed. So what I did in this scenario is compared this 60-day to this 60-day and said, well, which answer do I like better? I like the 60-day held all the way rather than the 60-day held for 30. And I didn't like the 30-day held to 30 on either one. But you can close the 30 early, and they didn't get into that in this chat. So I don't know what the stats are if you closed the 30 early. I don't have that number. But it makes a good argument for getting the 60-day though. I'm telling you, they've got such great videos answering questions like how wide to build the trade. I seen this article. They were talking to the guy that runs Simpler Trading. I always forget his name, but they were talking to him in an article, and they were like, "Hey, what was your best trade?" John Carter, thank you, that guy. They were talking to John Carter at Tasty Trades one day, and they were like, "What was your best trade in your entire career?" And he was like, "Oh, I made like a $400,000 or what is this big crazy number on a Tesla trade." And they're like, "Wow, like what kind of risk did you have to use to get those kind of returns?" He said, "Well, it's funny. I had he said I normally put on really, really wide verticals." He said, "But in this scenario, this time, I didn't make it a vertical." So that was one piece of why his profit was so big. It was just a straight up call. And he said, and then the other piece was I was able to actually hold on to the trade longer than I would have. Normally, he has criteria for getting out early, but Tesla had like done this stock split announcement, and its stock had gone crazy because everybody was piling into it over the split news, and it just kept running. And he didn't close it like he normally did. And so the takeaway was that he wasn't running his strategy, and he didn't follow his exit rules, and he made outsized gains. Yeah, that sounds about right. We break the rules and we get outcomes we're not used to. In his scenario, it actually worked out well, but in that article, he was talking about his really wide trades. And I was thinking, wow, I never take really wide trades. I mean, like really wide. So I started thinking by the time I had seen that video, Google was no longer a $3,000 company. So then I was like, well, what could I run really wide trades on? you need something that's really expensive. You don't want to go really wide on like a $600 stock. Well, the SPX comes to mind, and I love trading the SPX. So I started dabbling in really wide trades in the SPX. We all put on like 0-day credit spreads where, you go $5 wide and maybe you're at the money or you're slightly out of the money. But I've put on trades, can't do a 0-day now because the market just rang. I've put on 50-point wide and 100-point wide credit spreads 0-day in the SPX. So you get like 65.50, 66.50, and you collect $3,600 in credit, and it's going to expire today. And of course, I only get one, right? Because that's just crazy, crazy numbers. Now, after doing it for a while, I've made it a little smaller, like 25 points wide, and then you get 3 or 4 of them. But having these really wide trades, they behave differently, especially in 0-day conditions. So I wanted to know more about it, and I started to focus on the Tasty Trade videos that they had done, where they argue about, does it benefit us to put on a wider vertical versus a more narrow vertical, or wider butterflies or wider irons, all of that stuff. It was really good research, and it cemented the idea to me that we can go wide and get some benefit out of it. But of course, we sacrifice some too. In this scenario, if you look at that 66.50, there's not a lot out here, right? It's like I'm going to have to pay that 15 cents. And on the sell side, I was all the way in the money, which is why doing it on a 0-day in the SPX is better, because if it's in the money, you're not going to get assigned stock on the SPX. So they answered all kinds of research questions over the years. Their YouTube is fantastic. And if you have not yet come across it, check out the Jade Lizard from Tasty Trades. It it's a funny named trade, but it's a really useful trade. Suppose you want to own a stock at a lower price than the current price. You could pick a put to sell. Well, we've all done that on them cheaper stocks, and the put that we're selling isn't really offering us that much credit, right? We've all been there. Like, you try to sell a Ford put, Ford has no volatility. Their options give you no money when you sell them. So then you're like, all right, well, this put has no money in it. What do? You could look at the call side and add a call credit spread to go with your short put so that you're collecting more credit. I like that, right? Like that makes sense. And that's what they call a Jade Lizard. Selling a short put and then selling a call credit spread to go with it. The call spread width needs to be matched by the total credit collected. That's one of the check marks if you're going to go for a neutral to bullish bias. And it's better if it's in a high volatility market with an IVR greater than 50. Well, we made it to the end. I didn't think we were gonna. The only one we didn't get to was swing trade tactics, but that's all right because we can always hit that one later. The when it comes to those AI prompts, it's just kind of you got to poke around, see what works, see if you like the answers, but try it out one of these days. Start the prompt off by telling AI what its role is and then asking it questions and see if you get better answers or different answers at least, right? Even start it with like, you're my trade coach, or you're my I don't know, you're my price action coach, and I need you to teach me about whatever today, breakouts, breakdowns, I don't know, something. You know what I mean? Like, give it the depth of what its role is in the conversation, then ask it for something. I think you'll find that you get a much different experience with AI if you try that. And if you're trying to code an indicator, just like I said earlier this week, if you try to code it or if you just want help coding it, reach out to me. Don't go buy something without at least exhausting all of your resources, because some stuff you just have to buy. There's just no way around it. But if I can help you avoid it, then let's avoid that so you're not spending money on indicators that you don't need to buy. Sometimes we can't help it though. Like that options indicator on TradingView. I hope y'all have a good weekend. I'm gonna get the bike out, see if I can burn a little bit more. I can't believe how much sun I got yesterday. A little more than I expected. But it's Friday, so no, not that kind of bike. I'm handicapped. I can barely walk without a cane. I'm not gonna try to pedal butt up the road. Plus, I live on a hill. Getting down the hill would be easy. Boy, getting back up the hill. Woo-hoo. We owned mountain bikes when we were in Utah because it's just nice and flat, no hills. And we would pedal around. Uh, we moved back to Kansas and moved to the top of the hill. We took one bike ride on a pedal bike, and that was done. We walked them back up the hill and we sold them the very next week. That we're done with that stuff. No, but my cruiser is sitting out in the garage and I'm trying to get some miles on it before the nasty weather gets here because I am a fair weather rider. I don't ride in the nasty stuff. I'm too old to be driving around in bad weather on a motorcycle. But everybody, I hope you have a good weekend. I'm always interested in topics. If you guys want to cover something, it doesn't have to be swing trade, it can be anything. I love options talk though. It's there's already a lot of futures coverage in here. So, you know, here's a question for somebody. Does anyone know how to change the chart number to contract numbers on Webull for Windows? I don't use Webull. I gave up on them when they promised options for 5 years and never delivered. I know they did deliver now, but for 5 years they didn't. Um, so I can't answer that question. But if somebody knows, they asked it on YouTube in the live stream, and you could, like pop up and give them an answer on there if you trade on Webull. All right. Yep. Everybody, I'm shutting it down. Have a good weekend. And